So we just recently did a video on the very best performing year-to-date so far in 2021 Fidelity Index Funds, and I wanted to take the opportunity to do the same thing for Vanguard because I do like Vanguard Index Funds. What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video we are talking about Vanguard Index Funds. More specifically, Vanguard Index Funds and Exchange Traded Funds, the very best performing funds so far in the year 2021. In this video, I'll break down for you these 5 different Vanguard ETFs and their index fund counterparts because Vanguard does ETFs and index funds and they cross over their assets, which is great. We'll also take a look at the individual characteristics for each of these ETFs. And then finally, I also put a custom spreadsheet together for your guys' benefit to see how these funds have performed, not just year to date, because year to date's just a short amount of time and we should be long-term investors. So not just the 1 year, but all the way back to 2010 to see how they've performed, and a spoiler alert to see how they perform against this other index out there. You guys know how much I love to talk about all things investing, whether it's dividend stocks or index funds or anything for the average Joe out there. And furthermore, I never want to waste your time and I always want to deliver massive value with every video. So let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. Alright guys, so we're here on the Vanguard website, and what I went ahead and did is took a look at all their ETFs and index funds to see which ones were the best performing so far year to date 2021. If you guys can recall in a previous Vanguard video, the name of the game in 2020 was growth ETFs and growth index funds. We'll see how those compare this year. All right, the very first Vanguard Index Fund and ETF we're going to look at is the Vanguard S&P Small Cap 600 ETF, ticker symbol VIOO. As you can see right here, it invests in stocks in the S&P Small Cap 600 Index, which represents the 600 smaller US companies. It is a small cap ETF. Small cap equals smaller sized companies. It's got an expense ratio here of 0.10%. And if we scroll down here, we can see that the most recent market price as of July 16th was $195.70. The largest sectors here would be consumer discretionary at 14.9, 17% financials, 17% industrial, and then 13.8% information technology. It's got 604 different stocks in the ETF, and you can see the top 10 holdings based on their total net assets represent 5.8% of the total net assets in the ETF. Top results here: GameStop, Omnicell, Macy's, Saia? Not sure how you say that. Neogenomics or Genomics, Chart Industries, MicroStrategy, 3D Systems, Power Integrations, and Agree Realty Corporation. Year to date, this fund is up 16.51%. And if we look at the 1, 3, 5, and 10-year returns, there we go, I lost them. There we go. 1-year return, 67.34%. 3-year return, 12.22%. 5-year return, 15.82%, 10-year return, 13.41%, and since inception, September of 2010, 15.35%. This Vanguard ETF does not have an index fund component, but the others will. All right, next up on the list here is gonna be the Small Cap Value ETF, VBR. The Vanguard Small Cap Value ETF, ticker symbol VBR, also has a counterpart, Admiral Shares Mutual Fund. For your awareness here, let's go ahead and pull that up. It's VSIAX, the Vanguard Small Cap Value Index Fund, Admiral Shares. Whether you choose the ETF version or the index fund version, it doesn't matter to me. It's the same underlying assets. But the great thing about ETFs with Vanguard, they're great investment vehicles and you can own them with any brokerage out there. Whereas most other brokerages will have a problem with or will charge you a fee to own a Vanguard mutual fund. This ETF has an expense ratio of 0.07% and it seeks to track the performance of the CRSP US Small Cap Value Index, which measures the investment return of small cap value stocks. When we think of types of stocks, we've got value stocks and we've got growth stocks. Growth stocks are ones that are still significantly growing, whether it's because they're still young in their growth cycle or maybe there's just part of the information technology sector right now and they're growing rapidly. Whereas value stocks are generally more established and they are at the end of their growth cycle to where they're just now in maintenance mode. They're a strong business, they've got strong profit metrics, and with respect to their price per share, they're a value. Current price per share, $166.30. Though the great thing about Vanguard ETFs and most brokerages out there is you can own them with fractional shares, which means you don't need $166 to own part of this ETF. We've got our portfolio composition here, 21% financials, 19.8% industrials, and then consumer discretionary 16.4%. Other numbers are pretty small. We've got 975 different stocks in this ETF, which is a ton of diversification. The top 10 holdings make up 4.6% of the assets, and we've got companies like Diamondback Energy, IDEX Corporation, VICI Properties, Nuance Communications, Molina Healthcare, Signature Bank, so on and so forth. So year to date, this fund is up 17.8% as of July 16th, 2021. And if we take a look here, returns before taxes here, 1-year return 65.52, 3-year return 10.82, 5-year return 12.79, 10-year return 11.84%, and since inception in 2004, 9.59% average annual return. All right, number 3 on the list here is the S&P Midcap 400 Value ETF, ticker symbol IVOV. This ETF is a midcap ETF, and it also has a Vanguard Midcap Value ETF counterpart, which you can then access and then get access to the mutual fund. But this specific ETF does not have a Vanguard Index Fund counterpart. It aims to invest in stocks in the S&P Midcap 400 Value Index, composed of the value companies in the S&P 400. Expense ratio here is 0.15%. We can see here the market price as of July 16th, $156.90. The portfolio is made up 21% financials, 17.2% industrials, 13.6% real estate, and then 13.3% consumer discretionary. 309 different stocks in this ETF, and the top 10 holdings make up only 8% of the total net assets. We've got companies like Steel Dynamics, Owens Corning, East West Bank Corp, Jones Lang LaSalle, UGI Corporation, Reliance Steel, Lear Corp, First Horizon, Allegheny, and AECOM. Year to date, this fund is up 19.09% as of July 16th. And then if we look back even further, we can see 61.23% average annual return for the 1 year, 11.38% for the 3 year, 12.65% for the 5 year, and 11.69% for the 10 year. Since inception in September of 2010, up 13.19% on an average annual basis. All right, number 2 on the list here is the Russell 2000 Value ETF. Ticker symbol here is VTWV. The Vanguard Russell 2000 Value ETF invests in stocks on the Russell 2000 Value Index, a broadly diversified index predominantly made up of value stocks and smaller US companies. So this one here has an expense ratio of 0.15% and a current market price of $137.01. This ETF has 1,420 different stocks in it, so quite a bit of diversification here. And from an equity sector diversification standpoint, we've got 25% here in financials, 13.9% in consumer discretionary, 11.3% in real estate, and those make up the big ones, 14.9% in industrials and 11% in healthcare. Top 10 holdings here in this mid-cap ETF: AMC Entertainment, Ovintiv, Tenet Healthcare, Stag Industrial, EM Core Group, Macy's, South State, Valley National, Chesapeake Energy, and CIT Group. Year to date, this fund is up as of July 16th, 19.21%. And further back, we can see the 1-year return, 73.15%. Last year's been hot for mid and small cap stocks. 3-year return is up 10.27% on an average annual basis. 5-year return, 13.58%, 10-year return on average, 10.75%, and since inception in September of 2010, up 11.83%. All right, lastly here, number 1 on the list is the S&P Small Cap 600 Value ETF. Ticker symbol on this one is VIOV. This one here invests in stocks in the S&P Small Cap 600 Value Index, composed of the value companies in the S&P 600. So it's not just the Small Cap 600, it's the Small Cap Value Index 600. Most recent market price here as of July 16th, 2021, $170.70 per share, 77 cents per share, excuse me. Scrolling down here, we can see that the number of stocks in this ETF, 476. And based on the equity sectors, we can see consumer discretionary makes up 14.7%, financials make up 23.8%, industrials make up 16.7%, and real estate makes up 9.8%, with information technology bringing up the rear at 8.1% for the top sectors. Of those 476 holdings, the top 10 make up 7.7% of the total net assets. Those top 10 holdings are GameStop, Macy's, PDC Energy, Residio Technologies, Signet Jewelers, Pacific Premier Bancorp, Bank United, First Hawaiian, Assured Guarantee, and Bed Bath & Beyond. Year to date, this fund, as of July 16th, is up 22.14%. But we can look back farther historically and see that the 1-year return is 77.16%. The 3-year return every year on average is 10.75%. 5-year return, average annual return is 14.36%. 10-year return, 12.88%. And since inception in September of 2010, 14.31% on an average annual basis. All right, guys, so I didn't mean to really rush through that part of the video, but I wanted to get us to the actual spreadsheet analysis, because I feel like that's gonna really bring a lot of color to what we're looking at and understand just how these funds rank, not just year to date, but also how they've performed historically farther than that. And as a quick reminder, the spreadsheet we're gonna look at, you can get access to it along with all of the spreadsheets I use on my channel if you're part of the Patreon community. If you want more information on joining the Patreon community, getting access to these spreadsheets, getting more dividend content, and check out the link in the description below. All right, so here's the spreadsheet, guys. I'll go ahead and just break down for you exactly what we're looking at here. We've got our 5 different ETFs. We've got the date created here, the price per share currently, the annual dividend, and their dividend yield, which is not quite as relevant in this video, but we're gonna include it anyway. We've also got 3 specific investing strategies. We've got the monthly contributions and not reinvesting dividends right here, which might not be as relevant for this audience as it is for dividend stock videos, but we're gonna include it anyway and see the differences. We're gonna look at monthly contributions and reinvesting dividends right here, and then we'll look at a lump sum investing strategy where we are living off of our assets, we're not reinvesting dividends, and we make our upfront contribution of whatever that lump sum investment is, and we are not making any monthly contributions. And then we've got one specific time frame here, September 2010 through July of 2021. And if you look right up here, we've got our inputs. We've got our monthly contribution amount. We've got our annual cost of living adjustment, how much we increase that monthly contribution every single year. And then we have how much we are doing a lump sum investment for, $250,000. All right, let's take a look here. First, we'll look at this first one where we're not reinvesting any dividends at all. All right, so in this case scenario here, we have the top portfolio value after this time frame, just about 10.5 years, is by far right here, $69,000 with VIOO, the S&P Small Cap 600 ETF, followed by at $63,000 Small Cap Value. Then we've got at $61,000 the Mid Cap 400. Then at $59,000 we have VBR, the Small Cap Value, and then lastly $57,000 with the Vanguard Russell 2000 ETF. All right, next up here, let's see how reinvesting our dividends changes the results. Let's go ahead and reveal this data right here. Okay, so now we've got, instead of $69,000, we have $74,000 for the Small Cap 600, still in first place. Then we've got a really close tie here for third, actually, so $69,000 right here for the S&P 600 value. Then they're both $67,000 here, just about, VBR and IVOV. So it actually made a big difference for VBR reinvesting those dividends to be much closer to the third spot. And then lastly, we've got $64,000 for the Vanguard Russell 2000 ETF, VTWV. This is all great, and with monthly contributions, we have the ability to dollar cost average along the way. But what if we have to invest all of our money at the beginning in September of 2010 and see how the results are gonna play out with not making any additional monthly contributions? Let's take a look here at the third option. Let me scroll over here. All right, let's reveal this data and see how these funds respond with just the lump sum investment. Here we go. We've got $882,000 for the S&P Small Cap 600 ETF, VIOO, still in first place, followed by right up here $776 for VIOV. Then we have $720,000 with the S&P Mid Cap. Then we've got $672,000 right here for fourth place, the Small Cap Value ETF, VBR, and then lastly $623,000 with VTWV. So you can see here that the results are magnified for the first place result here with $882,000 when we have that lump sum investment and we're not making monthly contributions. Now, one thing I want to do here is I want to share with you, we want to make sure and keep this data in context, right? Because we might just think, well, these are great funds year to date, so which means this is a great number. These are great numbers, right? Well, let's see, let's compare it to a very strong bellwether index, one that everyone looks to see what the state of the market is. Let's look at the S&P 500, and to do that, we're going to look at VOO, the Vanguard S&P 500 ETF. Let me just go ahead and reveal that data here. We're gonna find, as you can see right here in column H, J, and L, that the S&P 500 beats all these funds on all 3 accounts. When we're not reinvesting dividends, it's got 75 versus the next place, 69,000. If we're reinvesting dividends, we've got 85 versus 74 for the next place here, that one that outperformed the small cap 600 ETF, VIOO. And if we have a lump sum investment, instead of $882, we actually have $915,000. Let's take a look here at the data with respect to a graph to see how things bounce around along the way throughout these 10.5 years. Here's the first one here when we're not reinvesting dividends and we're looking at the total value here. We've got everything's pretty much about the same along this way. And then right about here in 2018, the blue VIOO bounces up top of everything, comes back down here in 2019. Then right here where all of these take a dive, that's the COVID correction. You can see that the S&P 500 had rendered out here to first place, took a dive like the rest of them, but then took off and almost got caught by VIOO here in 2021. But at the end of the day, the S&P 500 is the one that's outperforming the most. You can see that most of these actually have taken a dive here in 2021, the small cap and mid cap, where the S&P 500 has continued to stay strong. Let's take a look at reinvesting dividends to see how the results change. You can see here we've got now the S&P 500 is in dark blue. Really, things are about the same all along the way here. Everything is still very close together until the S&P 500 breaks out here in 2019 above the others, takes a dive like everything does during COVID, and then really takes off here, almost gets caught again by VIOO, but at the end of the day, small cap and mid cap has taken a dive year to date, and the S&P 500 has gotten even stronger. All right, let's take a look here at the lump sum investment total value here. We're not making monthly contributions. How do these funds perform? Well, things spread out a bit here. You can see that we've got a low performer here. VTWV is down below the rest of them and is the worst performer. We can see that VIOO performed really strongly, was at the top of the pack for most of the way here, not by a lot. It broke out a little bit here in 2018, before it came down with everything else. COVID happened, and then the S&P 500 just didn't dive as much as everything else did. And really close here in late 2020, early 2021, VIOO was still ahead. Unfortunately, it took a dive here year to date, and the S&P 500 pulled it out. The important lesson we need to learn from this, guys, is that at any time throughout the year, any one year, certain funds are going to outperform, but that does not make them necessarily a great investment. We have to look back into history and get some context as to how these funds perform long term. If we're looking for retirement investing, then we need to be long-term investors. Hopefully you find some value out of this video, guys. Make sure to leave your 2 cents in the comments below. Let me know what you thought, what you wanted to see that you didn't see, what you expected to see that you didn't, and also what do you guys want to see from this channel in the future that you haven't seen already. Make sure to leave your 2 cents in the comments below. And that's all I got for you guys. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.